Well, let's talk about HUL and Pidilite, the FMCG majors, and revisit the implications for the stocks. But also, of course, I mean, these are in a way they provide signal for their respective sectors. Mangalam is here. Mangalam.
Well, it's a tale of two cities, right? Both results were largely in line, but in HUL's case, the expectations were very muted. And in Pidilite's case, the expectations were slightly elevated as well. So if you look at HUL, the net profit was boosted by a 500 crore one-off that came in, but nothing really to write home about when it came to the numbers. The revenues grew just about 1% The EBITDA grew by about 1.5%. That's what the street was anticipating. Margins largely between that 23 and 24% mark. 23.2% was the company reported, and the net profit boosted by the one-off gain on PureIt sale itself. Volumes were absolutely flat, and it's not that there was any unfavorable base or anything. Over the last 7 or 8 quarters, the volumes have been middling between 2 to 3% itself. And if you look at the segments out there as well, home care grew about 5.4%. The street was working with a number of 2 to 3%. But besides that, all the other segments, personal care, foods and refreshments, as well as beauty and wellness, all of them underperformed street's expectations. The company has made an announcement where they will acquire 90.5% stake in Minimalist for about 3,000 odd crores. It's an annual revenue run rate of over 500 crores. They're essentially buying the brand, the positioning and the customers of this business. But then again, the stock had corrected about 22% from its highs, trading at lower than historic valuations. But until growth does come by, it looks unlikely that the street is looking at HUL favorably. On the other hand, Pidilite, there is subdued demand across both urban and rural geographies. The company's stepped up ad spends, and amidst that, they've reported revenues slightly above street expectations at 3369 crores. EBITDA also around that 800 crores. Yes, the margins did come off, but the street's expectations here were slightly elevated. The company's own guidance has been between 20 to 24% itself. And as a result of which, in a weak environment, the company's reported revenue growth of 7.5%, EBITDA growth of a similar amount as well, and a net profit growth of 9%. The total volume growth this time around came in at 9.7%, led by 7% consumer volume growth and 21% B2B volume growth as well. The other thing that works in the favor of Pidilite is that those who want to play the building products theme, are now split between paints and Pidilite. The paint sector has challenges of its own with regards to competition, etc. So that gives a clear run to Pidilite for investor capital as well, as there is not as much competition in adhesives, and VAM prices are continuously lower as against crude prices as well.
All right, Mangalam, thank you very much for that. So that is the picture on FMCG. Tale of two cities, as Mangalam said, for our viewers. Well,